Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields. A couple ticks higher in yield today. Not seeing a whole lot of price action, given the fact that we have all this data coming out this week. We have auctions, we've got inflation, we've got FOMC, we've got ECB, we've got BOJ, we've got retail sales. All of this likely will be thrown into one big pot. Which is most important, I think, obviously, is the FOMC, press conference, forward guidance, dots, and whatever. That's all going to be what kind of dictates trade. Today, we're seeing 10-year note yields trade in tight range with a modest uptick in yield. Not really much of an event to discuss. And if we look at market volatility, there is a bit of a surprise. Market vols are as high as they've been since the Italian bond spike that we saw back at the end of May, when the concerns over politics, over whether the Italians were going to talk about leaving the European Union. So we do have quite a bit of a bid in volatility, which I think is actually necessary and should be the way it is because of the fact that we have all this data, because we've got a Fed that's going to talk about second half of the year growth versus inflation versus rate policy. I think a lot of things could change or a lot of things could shift, and volatility should be higher. It's about time it's higher. So volatility trading higher, yields roughly unchanged. Let's look at positioning, because if you look at what the leverage fund community has done, they remain net max short the history, or go back to 2006, since they've been covering this through the TFF data, and they remain net short. We would have thought there would have been a little bit of an uptick, maybe a little bit of a cover, given the fact that risks are so high, but we really haven't seen that. Yeah, we saw a modest hiccup, a small amount of covering, but it seems that the mass community of leverage positioners want to stay short going into FOMC, and it looks like they're going to do that with the idea that yields are going to go higher. Retest that 310, maybe get above it. If we do, that's a real big breaker. That's a backbreaker for any longs out there. That's going to probably push us back up to 3.25%. Now, that's a long way from where we are now. We're hovering it right around 297. But given the fact that we have the Fed meeting today, given the fact that we're going to hear about balance sheet possible changes, we're going to hear about rates, we're going to hear about second half growth versus inflation, which I think are the two most important components of the FOMC press conference. How will they handle growth and inflation if they don't play nice in the Fed's policy making business right now? So as we head into FOMC, leverage community still remains net short, rates remain in a tight range, and volatility is higher, which means something is coming on the horizon. This is Todd Colvin coming to you from the floor of the CME Group.